Well, thank you so much for joining us, Eli. Just a few questions for you. For the benefit of our listeners, could you just give us a brief summary about your professional background and your respective areas of expertise with Bank of America/Merrill Lynch?
Sure. I cover closed-end funds for Bank of America Merrill Lynch Research. I cover about 100 closed-end funds, munis, taxable fixed income, equity closed-end funds. I've been doing it for about 7 years. Before that, I was a technical and macro strategist with Bank of America Merrill Lynch.
Great. So concerning your review of ways to integrate closed-end funds into an investor's portfolio, when and why should this action be done?
Well, I think that the why is more important than the when. I think that typically investors go to closed-end funds for yield, and investors looking for yield can generally find higher yields with closed-end funds than with other securities. But there are risks that come along with that. They're able to generate higher yields because they use leverage, and because a lot of times the funds trade at discounts. And so those can present additional risks for investors that they need to understand.
Sure. And then what type of investor is a good candidate for buying a closed-end fund?
I think typically the best investor for closed-end funds are the more aggressive investors, mainly because of the risks involved in owning closed-end funds and the volatility of the stock prices. So typically more aggressive investors, although even for the more moderate risk profile investors or conservative investors, closed-end funds can be appropriate, but probably in lower amounts. We recommend roughly no more than 20% for allocation to closed-end funds for aggressive investors, 15% for moderate, and 10% for conservative.
Fantastic. And also, what is your forecast for 2015 about this overall investment vehicle?
Well, I think you have to be careful when you talk about closed-end funds in terms of being an investment vehicle. Because they invest in so many different asset classes, you really have to consider that a muni closed-end fund is very different from a senior loan closed-end fund, which is very different from an equity closed-end fund.
Right.
So talking about in generalities about the structure and where you see value in the structure, I think is not the right question. I think the question is, what parts of the closed-end fund market do you see value in for 2015? And I think for 2015, I think senior loan closed-end funds offer a lot of value, especially now where they're trading at about 8% discounts on average and attractive yields. Especially with the potential for rising interest rates, the eventual hedge that senior loan closed-end funds will provide against rising rates is going to become increasingly attractive to investors.
Wonderful. What should financial advisors be aware of in terms of pairing their clients with a closed-end fund?
Volatility. I think that's the general theme of this interview so far, is the volatility in closed-end funds, and I think it's an important theme that people really need to appreciate. Typically, as I said earlier, you generally want to be a more an investor that's willing to take on more risk for a closed-end fund than someone who's not willing to take on risk. But for those investors, I think closed-end funds make sense.
Volatility is key. And then also, what is the most important thing to consider based on the analysis you have performed regarding closed-end funds?
Distribution stability is a big one. Valuation, what drives valuation? Typically it's yields. Higher yielding closed-end funds will generally trade at higher valuations. Lower yielding closed-end funds will trade at lower valuations, so deeper discounts. So when you think about it in that way, distribution stability becomes increasingly important. If a dividend is likely to be cut, it'll trade at a deeper discount. It's something to be aware of.
Sure, great. And then also, what else would you like listeners to know about closed-end funds in general?
I think most of the things I've said have been fairly cautious. I think, and I don't want to scare anyone off. I think that they're a great investment vehicle for a portion of your allocation for yield. And one of the benefits of closed-end funds right now is that leverage costs are incredibly low, roughly 50 to 100 basis points for most closed-end funds. So the carry between what a fund can borrow and what they can invest in is fairly wide, which is good for earnings. The other positive right now is discounts. The average discount on closed-end funds is about 8%. So I think the combination of low leverage costs and deep discounts offers some particularly attractive values in parts of the market right now.
I agree. One last question for you before I let you go. Based on just the conference and what you've seen so far, what do you think would benefit advisors as well as investors coming to this event?
I think gaining a good understanding of what the closed-end fund structure offers investors in terms of a stable asset base and the ability to use leverage. I think that this conference is getting that point across to a lot of the people in attendance.
Fantastic. Well, thank you so much, Eli,
Sure.
And enjoy the rest of the conference.
Thanks.
All right, thank you.